General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay. I did see TradingView has its own news. As they top to bottom stocks. Which is interesting. I wonder. I'm just trying to see the NVIDIA. Now Wall Street turns to NVIDIA. Okay. NVIDIA beats estimates with 81.6 billion sales. Okay. 81.6 up 85% from the year earlier and beating. Okay. So they wanted 78 billion, they gave them 81 billion. Net income 58 billion. 3 times the earlier results. They only wanted 42. Wow. Okay. Shout out to the TradingView news button. News, hold on. Yep, that's the news button. They got the fundamental. That's very interesting. All right, TradingView, you're doing a good job. Let's get to the charts. Let's do this. Where's the anchor point? So this Monday low held. Tuesday EQ. And we left this flat bottom. And we also left this Monday cannot be the anchor. I think they're gonna sell off though. Nvidia people sell off, and 50% of this held. We got an order block here. I want to just be like, this is it, this is the top, and we're gonna go down. We could just be like, we'll take this out and then turn back around. Right now, the anchor is Tuesday though. And Tuesday EQ is a line in the sand for that because we could still come back down. This is the original plan since for averages. Tuesday went down. I thought we would push up and then maybe come down. This flat bottom is getting on my nerves. I want to target it. If not, let's say we bounce off Tuesday EQ'd and previous week's high. But so far, Tuesday. Like the Tuesday range. Weekly bias template. Bearish. It's really hard to be bearish after that earning. It's going to really depend on your video. And since we closed above this, we'll watch this open price. This will be we're going to buy. We start closing through 50% of this. That defeats order block narrative, gives us Tuesday low target, or Wednesday low target, Tuesday low target, flat bottom target. Nothing bad happened though. So far, there's no reason to be. Nvidia had great earnings. And we could just continue higher. Shut your framework hit rate. It's been good. Been choppy, but readable. No case studies. This is week 4 in a 5-week month. This week was shorter than week 1. Options expiry week here. This week don't take this previous week's high, then that gives us a weekly swing high. People are going to start to sell. In the 5-week month. No. 5-week monthly cycle. We start to build the wick for the month. This month's open price is a target as well. Some action mitigation signals. More of a compression week. Week 2 and 3 built the bulk of the monthly candle so far. Much better. Let's move to the M5. Narrative framework and accuracy. Price is slow. These compression weeks. Getting used to it. Experience success, failure tag. Send. Keeping shots down. Says keeping shots down. Much better. Case study vault reference. Not really seeing nothing too spectacular. I'm gonna do the date because I'll be. Try this. Today was FOMC minutes. Tomorrow is unemployment. Something else too. PMI, unemployment. Why is this not red? Okay, yeah. Hanging in there, yeah. Yeah, this. Let me look at something just real quick because this just looks weird. Let me look at the 20th through the Wednesday because where's the red unemployment and all that good stuff? Okay, there go PMI, CPI, PPI. Okay, I'm pretty sure that was red when Joe Biden was president. Unemployment PMI tomorrow, 8:30 to 9:45. Consumer sentiment at 10. That's. Let me just make sure. Okay, at least it's orange. So day type. Expansion day. It kind of did its job if it was an inducement because it did the inducement, took the liquidity. It kind of does look like a manipulation too. It's an engagement day. Medium. Okay. Things confirmed. The anchor is not. So far it's Tuesday. Yes. No. What time this is that flat bottom still? Daily delivery. Ain't moving slow. Okay, today. Super choppy, but these are like old levels we running through. Look at how we opened though. Opened, barely no Judas, and then just rally. We getting a lot of those. Like gap and go, new day opening gap type plays, which is good to see because this, for a minute, every time we had a gap, we at least get a retracement. But you can get started getting used to playing these, knowing that you just got to bounce off that gap. Delivery, set on, open range gapped, expanded. Mm, this weekly delivery don't look too impressive. It's efficiently traded range. Everything is balanced. Mm, also note we still at previous week EQ. This week is consolidate. Interesting. This will still be ideal just to click this out, but we don't have to. Function is to see if we sell from here or push to the daily order block. SPX. The same thing. Balanced, everything choppy, pushing. Dip and go. Trying to push to low levels to get to Monday's high. This is kind of telling me like, oh, we might have daily S&T to where we don't need NASDAQ to take that high because it took it on SPX. It's that Tuesday 50%. Which I want to see now, since I remember that on the daily. We didn't take the low. We came and took the high. And we didn't close above either one of them. Yeah. Did not close above Monday or Tuesday. Speed and sweep. Push there. And also here. Definitely price, definitely being held. Or either it's just tighter. Did run up from like maybe, let's see, let's get a number. Okay. 2, 3, 5, 6, 7. Yeah. He did run for like 7 weeks. He would be tired too. Okay. Let's do the stocks. SPY. I was trying to go up there. It looked like we did it on the daily. Yeah, I think that's when we used the daily today. Let me see what QQQ looks like on the daily. Okay, no Monday. Then on SPY, above Monday, but not. So on the stock chart, we closed above Tuesday. Definitely, we got a strong gap here. It's interesting too. Let's look at SPY daily. Did I close above Monday? The stock did close above Tuesday high. The key level on the stock is different though, because it's like you have to watch this volume imbalance. Which makes sense, like the mass part. And I'll be looking at this or 50%. Ain't no order block though. That's the main thing. Let's look at this. Kind of got the same thing. The volume imbalance starts here though, closer to the low. And we're closer to all-time high on QQQ. Let's look at NVIDIA. It's the boss. The boss of all stocks. Wow, we're not even close. We swept Tuesday's high with the doji. It's looking like these guys want to sell. NVIDIA look like you want to take profit now. Strong day. See Asia. Give me a lead on if they just gonna dump tomorrow. Right now, 50-50. Just one of the main reasons, cause not have a big day as far as range. As far as range, we still at EQ of previous week's range. And video is in the driver's seat, not the passenger. So we still waiting. Today was an engagement day. Got this here going for retracement to the opening range gap. Now it's a loss. I got payback on the reversal up going towards Monday. So, for sale. It's to target 50% for its really consequent encroachment. Open range gap, it's a loss. Then I took model 12.5. Target Monday high. Yeah. If not what caused it, this doesn't apply. Do well. Execute on the setups. Manage risk. It was not a no trade day. Played out. What do we learn? Starting to notice these slow days. Get back in the rhythm. Watch for the orange folder news. Employment. And I think it's PMI. Yep, it is unemployment and PMI. And that's it for the earnings. Okay, did the weekly review or the midweek review and Wednesdays. All right, y'all. Y'all have a good day. Peace.